Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwaves.com. Welcome to YouTube 24 Elliott Waves channel. Today we're going to discuss how one can forecast the fourth Elliott wave. Alright, there are many ways, different trading strategy that traders use, okay, to forecast the fourth Elliott wave. Alright, so I will share some of them with you. As I explained to traders before, when it comes to wave trading or Elliott wave strategy, I do not have any secret. I share everything with traders. And I recommend to traders, if you like the video, to share it also on the web. Why? Because to have an orderly market, we have to have a very educated market participant, all right? And the wave theory allows us, okay, to trade the price itself instead of trading the indicators. It also allows us to forecast the markets in real time, all right? So let's get started. Today is the 9th of February 2014, and the time in London is 21 minutes past 10 p.m. In New York, 21 minutes past 5 p.m. How do we forecast the fourth Elliott wave? All right, very, very important. Traders very often find it very difficult, okay, to forecast the second wave and also the fourth wave because these are corrective waves. Corrective wave can be very, very complex and difficult to trade, and it will be great to know how to forecast, okay, the end of the fourth wave. What we are trying to do, we want to know, all right, what we are trying to forecast, we want to know where the fourth wave will end. Now, as always, when we are talking like this, we are talking about probability, all right, okay, we are talking about the highest probability, all right. We want to use the Elliott wave to guide us to navigate through this messy market, like we use a Google map, okay, to navigate through the city. All right. So the wave principle allows us, okay, to navigate through the markets. All right. So I recommend to traders, okay, if you are doing something else, or if you are in a crowded area, a noisy area, all right, I recommend to traders to watch this video in a quiet place with a total concentration, because as I'm starting now, I'm going to go a little bit fast because I don't want the video to be too long, and I will be speaking, all right, pointing traders, okay, to the right direction. All right, so we see now. So suppose, okay, so I'm going to start. I have my drawing already on the chart, and I want traders to pay attention. According to the wave principle, all right, the second wave must not cancel the first wave. So with my drawing on the chart, you can see that, okay, I draw my second wave up to this point, and it did not cancel the first wave. All right, so this is from here to here, this is the first wave. From here to here, this is the second wave, and here we have the third wave. Now, as soon as the fourth wave is underway, we want to know where the fourth wave is likely to end. That's very, very important for us. And it will allow us to make excellent trading decisions and also excellent investment decisions. So if you are a fundamental trader or an investor, you don't want to jump into the market and buy because you have some clients' money you want to waste. Now you want to enter the market at the right time and also at the right place. And the wave principle allows us to forecast the end of the fourth wave. So we want to catch the fifth wave, we must know when the fourth wave has ended. But we must also understand the structure, okay, the wave structure of the corrective waves. That's why I say to traders, it's very, very important if you are using Elliott wave to spend a bit of time to master all the corrective waves. You want to catch an impulsive wave, you must first understand the corrective wave. So, first wave, second wave, third wave. Now the fourth wave is underway. We want to know where the fourth wave is likely to end. This is the purpose of this video, to forecast the end of the fourth Elliott wave. So the first thing that we do, pay attention, all right? We will join the low of the first wave and the low of the second wave. This is the low of the first wave. This is the low of the second wave. We join this point, we draw a trend line. So if we want to forecast the fourth wave, we will say that the fourth wave can go down all the way here. But look at my charts, okay? We will say that you go all the way here. This is one method of, forecasting the fourth wave. But now, if we say that the fourth wave will end here, that will violate one of the Elliott wave rule, because the fourth wave and the second wave should not overlap. So straight away, I will know that this trend line is not useful to me, because by expecting the fourth wave to come all the way here, I'm distorting, one of the Elliott wave rule, which stated that, the fourth wave and the second wave should not overlap. So straight away, I'll know that the price may not touch this trend line during the fourth wave. All right. So one of the methods that traders use to forecast the end of the fourth wave is to join, the low of the first wave and the low of the second wave. Right. Let me adjust a little bit my drawing on this chart, and you will see what I'm talking about. Stay with me as I'm trying to play with my chart here. Stay with me, stay with me. I'm going to move my second wave a little bit up, somewhere up here, somewhere up here. And I'm going to move my third wave like this, okay? Now, I want to join the low of the first wave and the low of the second wave. This time, look, if I do it like this, joining the low of the first wave and the low of the second wave, now this trend line is useful. So I will expect my fourth wave. Let me remove this line. Are you with me? Stay focused. All right, do not blink at all. So we will expect the fourth wave to come and retest this trend line. This trend line, that's what we call the primary trend line. Remember that this is the primary trend line. So we will expect the fourth wave to retest the primary trend line. Now in this case, you will see that the fourth wave did not overlap the second wave. So did not violate the Elliott wave rules that stated that the fourth wave should not overlap the second wave. But sometimes, as I will show you in this video, on some of the charts that I've drawn on my chart, you will notice sometimes that when you join the low of the first wave, as I did at the beginning, the low of the first wave and the low of the second wave, and you are expecting the price to retest the primary trend line. If the fourth wave goes down to retest the primary trend line, that will violate the Elliott wave rule that stated that the fourth wave should not overlap the second wave. All right, this is advanced trading, and traders need more concentration when we are doing things like this. But in normal condition, all right, what do I mean by in normal condition? In normal condition, if for instance we have a second wave like this, and then a third wave like this, and then we join the low of the first wave and the low of the second wave, and the fourth wave is not overlapping, our projection for the fourth wave, our expectation for the fourth wave is not, this is my expectation for the fourth wave, is not overlapping the second wave, I will be expecting, this is about probability, ladies and gentlemen, this is not certainty, the price does not have to retest. The fourth wave does not have to retest the trend line. These are guidelines that we follow to forecast the end of the fourth wave. So in this scenario, if my expectation, my projection, my forecast for the end of the fourth wave is not overlapping the second wave, which means they shouldn't be in the same area. So if I highlight the high, okay, and the low of the second wave, it shouldn't go into the same space of the high and the low of the fourth wave. That's what we mean by overlapping. So you can see here they are not overlapping. If I draw the low and the high of my fourth wave, they are not overlapping. As I showed you at the beginning, they were overlapping, all right? So if my projection or my forecast for the end of the fourth wave is not overlapping the second wave, I will expect, okay, it doesn't mean that the price will definitely go down. I will highlight this zone as a possible end zone for the fourth wave. Now, let me say this again. Traders should not use the wave principle as a science or as a magic wand. These are guidelines that we follow to forecast the market. Very, very important. Otherwise, trader will get into trouble. So the first strategy to forecast the fourth wave is to join the low of the first wave and the low of the second wave, provided that our projected or our forecast fourth wave is not overlapping, okay, the second wave. If our forecast for the end of the fourth wave is overlapping the second wave, we will, okay, ignore these forecasts, which means we will expect the price not to touch the trend line, because otherwise that will violate one of the Elliott wave rules that stated that the fourth wave should not overlap the second wave. Great. Now, you will be asking yourself, George, so if our projected fourth wave is overlapping, okay, the second wave, what do we need to do? That's a very good question. And I can answer that question. As I said to you at the beginning of this video, when it comes to Elliott wave, I do not have any secret. My intention is to indicate ordinary traders and also experienced traders to use the Elliott wave more accurately without distorting the market. So what do we do when we have a situation when our forecast of the fourth wave is overlapping? You will see that very often. Very often you see that. You see very often that your forecast, by joining the low of the first wave and the low of the second wave, very often you see that your first forecast will violate the Elliott wave rule, which means the forecast of the end of your fourth wave will overlap the second wave. So this is what we meant. So if I join, you see, I highlight the high of the second wave and also I join the low of the second wave. You can see that straight away go into the space of my projected fourth wave. It shouldn't. It shouldn't. This is a violation of Elliott wave rules. So how do we handle that? When we have our projection or our forecast and we notice that our forecast is violating, okay, the Elliott wave rule that stated that the fourth wave should not overlap the second wave. Now, pay attention. How do we handle that? You will draw a line from the high of the first wave, and you will make that line parallel to the primary trend line. So this is our primary trend line joining the low of the first wave and the low of the second wave. Now, because our forecast end of the fourth wave is overlapping, the fourth wave is overlapping, our projected fourth wave is overlapping the second wave. How do we correct that? We join a line here, we draw a line from the high of the first wave, and we'll make it parallel, okay, to the primary trend line. This is the primary trend line. If you like, I can color that primary trend line in turquoise. Now you can see that I'm doing my drawing here to explain to you, okay, this essential knowledge about Elliott wave trading, because I want you to understand it and I want you to master it, so you can go back to this video over and over if you forget something, and so you can rectify your mistakes. So we will draw a line from the high of the first wave and make it parallel to the primary trend line. Because our projected fourth wave is overlapping the second wave, we must rectify that by drawing another line that is parallel, okay, to the primary trend line. So in that case, that will rectify, okay, our fourth wave, which means we will expect instead of forecasting that the fourth wave will end here, which is violating the Elliott wave rule, we will expect it to end here. So we will instead highlight this area as a possible, remember, possible end zone of the fourth wave. This is how we forecast the fourth wave or the end of the fourth wave, because our intention is to participate in the fifth wave. We want to enter the trade at the beginning of the fifth wave. We must know when and where the fourth wave will end. We should be able to forecast the end of the fourth wave. As I explained to you at the beginning of this video, there are many ways we can forecast the end of the fourth wave. I have demonstrated to you the first scenario, which we join in the low of the first wave and the low of the second wave. And if our forecast is not violating the Elliott wave rule, we will expect the price to retest the primary trend line. But as I explained to you, these are guidelines. The price does not have to go and retest that trend line. But we are using the Elliott wave principle to, okay, navigate through this messy market to make excellent trading and investment decision. If the price, for instance, my forecast there, the price here that I expect it to come here, and the price retest it exactly as I will forecast it, and if I receive a buy signal here, and remember, it's not all about technical alone. We will check the fundamental on Google Finance and Yahoo Finance. If the fundamentals are solid, I will be happy, okay, to buy this stock at the end of the fourth wave, without messing around, without okay, making too much, okay, going through too much stress. Sometimes, ladies and gentlemen, the forecast of the fourth wave can be complicated, as I'm going to demonstrate to you in this video. As I show you now, you get a picture. Sometimes, ladies and gentlemen, sometimes, are you still here? Okay, great. Which means you want to understand how we use advanced trading. Sometimes, apart from these two methods that I show you, sometimes the price may not come to retest the first line that we draw that is parallel to the primary trend line. How do we handle that? What we need to do in that case, which I'm going to show you on a real chart now, is to project this channel. You see this channel, exact size. So you see the size of this channel. We will project it here, parallel. We can project this first channel. You see the turquoise line and the first blue line. That's my channel here. So sometimes the price may not come all the way to retest it here, which I'm going to show you now. We will, in that case, we can project this channel here to the upper side. And we will, in that case, if I don't move my line, I'm very careful not to move my line. In that case, we'll expect the fourth wave, either if it to retest, to find a support here first. If it fails to find a support here, then we will say, okay, you will come to the second one. If there is something else that you do not understand, put your question below the video and I will get back to you. Or you can replay the video. This is how we focus at the end of the fourth wave. Alright? I'm going to bring on now another financial instrument, Biogen. By the way, I want to say to traders that I posted a video on YouTube that I call How to Combine Fractal Trading and the Elliott Wave Theory at www.24elliottwave.com on our website. This is on our homepage. You see how to combine fractal trading and the Elliott Wave Theory. You will see the same video on YouTube, on our YouTube channel, 24 Elliott Wave channel. I recommend to trade it to watch that video, and I forecast to traders. I use the fractals to forecast that this stock, Biogen, trader that watch that video will notice that it's correct. I forecast this stock will come to this orange line. When I was recording the video, the price was not near this orange horizontal line here. I was using that case the fractal patterns to forecast, okay, the price move. By combining the fractal trading and the Elliott wave theory, I was able to forecast the end of the third wave. But what I said to traders that day was that the move that we see here from here, now this we are now on the yearly chart. I was doing a demonstration on a monthly chart. Right, this is on the monthly chart. I explained to traders that the move that we see from here all the way here, okay, is just one wave on the yearly chart. And I said to traders that the third wave, which is from here, the third wave, if you watch that video, how to combine fractal trading and Elliott wave by 24elliottwave.com, all right? The third wave will end here. This was my focus, yes or no? And I was telling today that the fourth wave will end here on this green line. I still have my line on my chart, and I also forecast to trader that the stock, if it finds support here, as I explained to you, this is not a science. These are expectations. These are trading prime. These are guidelines. If it finds support at the level of 263.63, which means now we are expecting, now we hit the target 317, great. Now we are expecting that people sell it a little bit down to 263, and if you find support here, we will bring it up to this level here. This is the end of the fifth wave. All right. Now, suppose we were here, and I want to forecast the end of my fourth wave, which is, I was saying to you, this line here. But remember, the green line that I drawn here, the way I forecast the fourth wave here, I did not use the same method that I'm discussing to you today. I was using fractal trading to forecast the end of the fourth wave, as you will see soon. So, the green line that I projected here, this is a more advanced forecast using the fractal trading. All right, so remember that. But what I'm showing you today, all right, is a different method to forecast the fourth wave. All right, which means here, in this scenario, as I was showing traders before, the first wave was from here to this point. So in fact, I will color it now into orange so you can see on your chart. From here to here, that's the first wave. But this first wave is a minor wave on a higher degree. And the second wave was from here to here. That's the pink line here. And the third wave from here to here. So by applying the method that I have just shown you, now by my drawings, if you want to forecast the fourth wave, we will join the low of the first wave and the low of the second wave. This point and this point, because the pink line is the second wave. At the end of the second wave is this one here. The low of the first wave is here. The low of the second wave is here. So my primary trend line, I will color it, okay, in turquoise. This is my primary trend line. So I will say to myself that the fourth wave has a high chance to come all the way here. Now, let's see. My forecast fourth wave is not overlapping. Okay, you can see here that's the high of my second wave. It's not overlapping the second wave. All right, my forecast, the fourth wave, is not overlapping the second wave. So I will be saying to myself, there is a high chance that the price may pull back all the way here. But pay attention. There's something else that you need to pay attention to. This is another Elliott wave rule. Look, if we expect the fourth wave to come all the way here, that will almost erase the third wave. Look at that. All right? that will almost erase more than 70% of the fourth wave, because that will completely erase more than 70% of the third wave. So we do not expect, all right, we do not expect the fourth wave to go down more than 50%, to go below 50% of the third wave. All right, we do not expect the fourth wave to take a great deal of the third wave. So for straight away, I will say to myself, I will discount this forecast, okay? I will not use this forecast, because by expecting the fourth wave to come all the way here, that will take more than 70% of the third wave, which is completely wrong. So I will just leave my the turquoise trend line here, all right? For new traders, okay? You can review this video many times. If you have any question, ask your question. So you can see here. So I will discount straight away this first forecast. So what do we need to do? Now, remember what we said? I will now draw a line from the high of the first wave and make it parallel to my to the primary trend line. So this is the line that I'm drawing now, which I will color now into pink. So I will say to myself, well, if the fourth wave come all the way to the turquoise line, that will take a great deal of the third wave. It's not reasonable. So I will discount that. So now I have a new line which is parallel to the primary trend line right here. So I will say to myself, probably it will come all the way to the green line here. You can see that if I accept that again, this one, that the price, the fourth wave will end here, it's again a big chunk, okay, a big chunk of the third wave. Can you see that? It's a big chunk. If you come all the way here, that's a big chunk of the third wave. Okay, so what do I need to do in this scenario? Remember what we said. We will project this channel, the pink line and the turquoise line, the channel that we have here. We will make it parallel, equal size, should be the same size. So we're just going to play with it. That's my first projection. And then I'm going to do another projection again. These are the possible end zone for my fourth wave. So you see this channel. If I call out, you see here, this is the first channel here. So I project it here. So I will say to myself, possible target zone, though my first forecast was this line. Straight away I know that this was an abnormal projection, because which means the fourth wave will take a big chunk of the third wave. This is not reasonable. I would discount that. Then I would draw a line that is parallel from the high of the first wave. As always, I'm forecasting, I'm analyzing, I'm paying attention to the Elliott wave rules. The fourth wave should not overlap the second wave. And also, I understand that the fourth wave very often is around 38% Fibonacci retracement level of the third wave. In normal condition, we should be above the 50% of the third wave. Reasonably, we will prefer the fourth wave to retrace up to the 38.2, okay? Around that zone, not more than, okay, 50%. No, we don't want that, okay? That will be more reasonable for us. That will confirm to us for normal bullish stocks in an uptrend, the fourth wave is usually very shallow, all right? So now I have my second target here, but I can also project my channel, okay, to the upper side, giving me a possible end zone for my fourth wave. You can see that the first projection brought the price here. This is my first projection of this is the channel. It's my first channel. I project it equal size. It brought me here. A little bit reasonable. All right. Look at the second projection. The second projection brought it here. I'm going to color the top of the second channel, the second projection also into pink. You can see that it's almost equal to my a target level that are set using the fractal trading method to forecast the end of the fourth wave. So If one wants to forecast the end of the fourth wave, one can join the low of the first wave and the low of the second wave. But one must see, okay, whether the fourth wave is overlapping the second wave, and one must also try to avoid that the forecast is not taking a big chunk of the third wave. How do we avoid that? By projecting, okay, the first channel. So nothing should stop you after joining the low and the low of the first wave and the low of the second wave. All right, possible target zone. See whether this fourth wave, your projected fourth wave, is overlapping the second wave. If it's not overlapping, now verify whether the fourth wave is taking a big chunk of the third wave. Nothing should stop you. Now draw a line at the high of the first wave, make it parallel to the primary trend line, and after you have done that, that's another possible end zone for the fourth wave. Then project the channel to the upper side. This will give you a possible end zone for the fourth wave. So by using this method, I will say to myself that my fourth wave, the first target zone for the end of my fourth wave is here. All right, which means very bullish stock. In this case, the stock is very bullish, so the fourth wave is very shallow. All right, if that level fell, I will say next target is the blue line here. Possible end zone for the fourth wave. If the second one fell, I will say possible zone here. I also know that the fourth wave should not take a big chunk of the third wave and should not overlap, okay, the second wave. These are the rules that we follow when we are using the Elliott wave to forecast, okay, the end of the fourth wave. As I explained to you at the beginning of this video, there are many ways that we can forecast the end of the fourth wave. We can use fractal patterns, as I used here before in the previous video that I titled how to combine, okay, fractal trading and the Elliott wave trading. My target for the fourth wave is the green horizontal line here. In this video, I'm sharing with you another method that one can use to forecast the end of the fourth wave by joining the low of the first wave and the low of the second wave. Our projected fourth wave, our expected fourth wave should not overlap the second wave and should not take a big chunk of the third wave. We will expect the fourth wave to be shallow, to go down maximum around, okay, 38.2 or 40%, not to go below the 50%. Even 50% is quite high for the third wave. Should not go too deep, okay, if we are in an uptrend. We'll draw a line at the high of the first wave, make it parallel to the primary trend line. We will project the channel to the upper side, equal side. Do not cheat, exactly equal size, like I did here. This will give us a possible end zone for the fourth wave. As I explained to you, it's very difficult, okay, to trade the second wave and the fourth wave. And it's very great, it's very important, it's vital for us to know how to forecast the end of the fourth wave and be able to catch, okay, the fifth wave. Now, once we forecast the end of the fourth wave, it doesn't mean that we just go and buy like a crazy or sell like a crazy in a downtrend, all right? We will now, okay, just draw a line as I did here. You see, I draw my line here. The price is now here. I just draw it here. So here, I was expecting to come here. The line was here before it touched it. Great. Now, I will be looking for opportunity to sell. If I receive a sell signal, I will use the TSTW SYS08 to enter the trade and take it down. If it is approaching this level, I'll grab my profits. If I receive a signal here to buy, I will take it. If I going up, it's approaching, okay, my target level, I'll grab my profit. If I receive a sell signal here at the end of the fifth wave, I will sell again. Now, as always, these lines are guidelines. We are expecting the price to touch them. But if the price is not touching it, don't force it. If you do not receive a buy signal here, do not buy. It's not because the price pulled back to retest your target zone. Then you get too excited like a little child and say, yes, that's exactly what George said. Yes, it's retesting it. It will definitely go up. and you do not bother to check the fundamental, you don't go to Google Finance, Yahoo Finance, Economy News, fundamental can change the dynamics of the technical trading. Trader must always combine the technical and the fundamental. That's why a lot of fundamental traders call the area weight trading mambo jumbo, but it's not mambo jumbo. As I forecast for this Biogen, the end of that the price will come here. Now the price here, the area weight theory allow traders to navigate through the market as they Google. We use Google Map to navigate through the cities. All right. It makes sense? So do not use, okay, this trading strategy as a magic one. This is a guideline, this is a trading plan. This is how the professionals are forecasting the end of the fourth wave. As you can see on this chart, by using this method, I will leave my line on my chart like this, and I will just keep my eyes on this. In this case, my first projection, which is the green line using the fractal trading, is here, is converging at the point of the projection or the second projection. So first projection on my channel, second projection, same zone again. All right. So we are just watching these key levels and wait as the price changing direction at the point where we are expecting it. We will take advantage of it if we receive a valid signal. All right. It makes sense. It's also powerful. I want to show you another stock. I'm going to go now to the, okay, yearly chart. This is a Netflix stock. On this chart, you can see that if I go very fast, it's the first wave here. In fact, there was a distortion all the way up here, if you count that, but I will stop it here. I will call this as a distortion, okay? And it's a bit, okay, complex correction here, this session. And then the price pull back here, okay? So this is our second wave, okay? So if you want to apply the same method here, by joining the low of the first wave and second wave, if for instance, so this is the low of the first wave, this is the low of the second wave. If in this case you are here, all right, and you are expecting the fourth wave to come all the way here, as you can see that the fourth wave is overlapping the second wave. So I will quickly discount these, okay, a projection, this forecast, because if I expect my fourth wave to come all the way here, that will violate the area weight rule. The next thing that I need to do now is to draw a line from the high of the first wave and make it parallel. Is it parallel? Okay, that's it. Make it parallel to the primary trend line. This is the primary trend line. Now, so in this scenario, I will say, possibly, if the fourth wave is underway, possibly it will end here. Now, the next thing I need to verify, did my forecast of the fourth wave is taking a big chunk of the third wave. If it's taking a big chunk of the fourth wave, I will project the equal size of this channel to the other side. You will see that if I project it to the other side, we'll go above where we are the price now. So I will not project it. So here, the fourth wave is not yet underway. Until the fourth wave is underway, so we want to wait. So the third wave is underway. What we can do, how can we verify that the fourth wave is underway? Let's go back again to Biogen. That's a very good question. I'm going to remove some line here. The question trader asks, how do we know that the fourth wave is underway? Now, a lot of traders already know that the trend line will be broken. Very simple. Okay, the price will violate at least the common sense trend line. Okay, all right. It makes sense. Yeah, that's how we know that the fourth wave is underway. All right. So I'm going to go back now to the monthly chart where I was. I hope I did not remove too many of my lines. Exactly there. So we are now, this is from here to here. I said to you, we are in the third wave. We are expecting the third wave to end here. So how do we know that the fourth wave is underway? You see, if we draw a trend line along, you see like this? See? This is the common sense trend line to the third wave. But the price speed up. So we will draw another trend line like this. Okay? Alright? That's it. So I will leave this one like this. Alright? So we will expect the price run a bit too fast. In fact, we can go on like this again. All right. So we will expect at least this first trend line here to be kaput. Price on this monthly chart to close. So a monthly candle to close below this trend line. That's how we will know. Or we can use the TSCWSY008 to participate in a trade carefully. All right. That's how we will know. Okay. That the third, the fourth wave is that way. And we will be watching our target zone. It makes sense? It is also powerful. As I explained to you at the beginning of this video, one must always combine the technical and the fundamental. Financial instruments that are dynamically bullish will have a very shallow second wave and fourth wave, because the market is very, very bullish. But if the third wave is highly extended, there's a high chance that the fourth wave will be shallow. Why? Because a very bullish momentum was in place, like you see. So there's a high chance. That's how we know that the fourth wave is likely to be shallow. If we have a very, very strong third wave, there's a high chance that the fourth wave will be shallow. All right? Because the dominant force in the market is bullish. People want to buy. All right? So the fourth wave is likely to be shallow. All right? That's why we need to pay attention to. I will stop here, ladies and gentlemen. I hope you have learned something from this video also. Combine the technical and the fundamental. Check the management, check the product, check the market share, all right? Check the balance sheet, compare the short-term liability to the current asset, check the long-term liability, okay? See whether the company have a value if you want to buy, okay? If you want to sell, see whether there are some weakness, whether they are losing market share, and other verification using the fundamental together with the Elliott wave theory. I hope you have learned something from the video about how to forecast the fourth Elliott wave, the professional traders, and we'll put it to use, okay, to make excellent trading and investment decision. Until the next time, enjoy yourself and be very happy. We are the TSTW traders. Speak to you soon.